Today's video, we're going to take a look at the portfolio, some of the purchases that I've made in the last couple of weeks, and also the direction I'm going to take with the portfolio once I reach the 10K threshold. So let's get started. So looking at the growth of the portfolio, we can see that it's been going up in a healthy fashion. I'm up, I think, about $1,000 since I started this little experiment of investing into dividend stocks and covered calls. Um, the key really is just the regular inflows of money into the account. Every week I invest $300 Canadian, as I've mentioned, and the uh, orange line here is the S&P 500, and as you can see, the portfolio is up at $9,700, while the S&P, if I had invested in it, would have been at 87. So that's $1,000 in 4 months or so, October, November, December, January. We're not quite finished with February, let's say 5 months. I've made $1,000 starting with barely a $3,000 account, so that's not bad at all. As far as diversification, I went at first pretty heavily into the precious metals. At some point, I think I was up 33% of the portfolio was composed of precious metal covered calls. And I thought it was too much, so I basically trimmed the positions, took some profits off the table, and redistributed. Now I'm trying to reach this target here as far as the 11 sectors, if you will. They're like my own made brew of what it is that I want to achieve. So 30% of the portfolio, I'm aiming for commodities. So precious metals, basic materials, and energy are the ones that I'm focusing on. And I have some more cyclicals in consumer discretionary and real estate. Not too heavy, but I went a bit heavy with the SWBI at first, but it was a position I had in an account that was basically dormant, and I decided to go with it since it was already a dividend stock, boasting a 5% dividend yield. In the defensive sectors, I have consumer staples, utilities, and healthcare. I'm aiming for 30% of that just to give it some resilience. If ever there's a downturn in the market, then I know I have some part of my portfolio which is a bit more defensively oriented. And then I have the sensitive ones in which I'm aiming for higher yield instruments I will use in order to boost the overall yield of the entire portfolio if I think it's not generating enough income. But the goal is balance. I'm trying to keep everything more or less equal in some of the sectors, 40% into the cyclicals, and then 30-30 into defensive and sensitive. So that's the goal right now. Until I reach the 10 to 12K area, I want to try to have a layer that is very, very oriented towards diversification. I'm owning already 37 stocks, I think. Yeah, 37 stocks right now are in the portfolio. And in those, there are ETFs which contain even more. So I'm already holding over 100 stocks, maybe more. So that's a lot of diversification already. As you can see, we have a lot of different titles in there. What I will try to do is to build some bigger positions into some core ETFs that represent well their sector. So I'll try to reach like $1,000 or $1,200 in several of the main ones, like ENCL. I want to own at least 1,000. Another one that I want to have 1,000 in is HHIC. I'll go with also looking for it. HDIV is going to be a core position. GLCL, most likely I will build again. AGCC, I'll buy a bit more of it. EMCL, emerging markets. This is a new position that I've bought recently. This is emerging markets at about a 10% yield for this ETF. So I classify it into the international high yield, and also HHIS eventually. I'm waiting for a dip of the market to buy this one as well as ZWT. These are the positions that I have so far in order of total profits. So the increase in the share price plus the dividends. So in first place, not surprisingly, it's been AGCC at 39%. Even though I sold and I bought back lower. Also SWBI, SLJY, Land, Gold. These are all the best performing ones. And what I want you to take into consideration is that meanwhile, I also had some duds, like Ethereum down 59%. Novi already down a lot. I just bought it and it just puked like crazy. But it's part of the process, and this is why I didn't invest a lot into it. I'm probably going to build a position over time and just cost average, since I have no leverage, so I don't mind just buying more of a stock that has been performing really, really well in the past, but is having a downturn right now. So I'm a bit of a contrarian by nature. Also, HBTE, Big E, Circle, UNH, Flow, well, Flow is pretty much flat. So, but these have been going down. But despite that, I still made $1,000 with the good ones, and also because I've increased the weight into the sectors that I thought were into momentum, and I will keep doing that in the future. But right now, I want to build an equal base. For the first 20,000 or so, I want it to be very, very like a steady Eddie type of portfolio. And then as the portfolio increases, I'll start to add a bit of volatility to the portfolio, and also increase the dividend yield in order to create more income. But at least I'll have a really balanced base to work from. That's the goal. This is a bit outside of the snowball experiment, as it is a bit more advanced, but I've been trading for a long time, as some of you may know, and over time I've built some tools for myself that I use in order to make decisions. And I wanted to show you what I'm seeing in silver as well as in Bitcoin, because I'm not buying any cryptos right now, but I want to show you why. But I've been purchasing a bit more of the silver and gold stocks into my other portfolios, and I wanted to show you why. So basically, this is a daily chart of silver versus the US dollar. And as you can see, the line over here is the last week high. So we had 1, 2, 3 weeks of highs not getting penetrated to the upside, and now finally there's been a breakout basically on the daily chart. And on the 4-hour chart, this is a custom-made indicator that I've built, but basically this indicates to me that we are to a neutral zone, but favoring the longs. So I started to purchase some stocks, mainly miners and stuff like that, but I also have some leverage position into silver. And this is the 1 hour, so each bar is worth 1 hour. And basically, over here, this is another indicator that I use in order to tell me if it's overbought or oversold. And right now, it's appearing for the short term to be a bit overbought. So I've took some profits off the table into my leveraged account. But I have been purchasing slowly into silver stocks again recently because of that turnaround. So we had a big base here, which is an accumulation phase, which broke out over here. I don't know if you see my cursor, but basically it broke out of that formation. I love these little spikes out of the formations because this indicates the capitulation, basically. And now we have the breakouts. I'm expecting some type of retracement. Once I see that, this is where I'm going to probably buy more silver into the snowball experiment. But I wanted to just share my thoughts on what's going on in the silver market. As far as Bitcoin, let's take a look. Bitcoin has been, it was into a steady uptrend right now. There is no doubt that this is a bearish market. On the 4-hour chart, you can tell here that we've entered a neutral zone basically, but this is still very, very bearish. So I'm waiting for some type of formation that suggests accumulation and that the move is over. But right now, all I'm seeing is weakness, and there hasn't been a high broken in 1, 2, 3, 4, 5, 6 weeks now. So what I would like to see is another very aggressive move to the downside, and I'll start to buy again into the snowball experiment. I'll keep purchasing some of the crypto ETFs that I've been purchasing. But right now I didn't see any reason. I bought some at the beginning of the snowball experiment, but it's been puking, so I didn't add more to the positions. I guess what I'm trying to say is that it doesn't matter if you make mistakes when you purchase some stocks or some categories of investments. What matters is that you don't compound the error, and if you intend to buy more, then you need to be really patient until there is some type of indication that there's either configuration in the price action that tells you that there has been accumulation and we're breaking out of that, or there's momentum in the market in the direction that you want things to go, and there's no rush. Like now I've been waiting for a long time to purchase some cryptos. In my other accounts, I've been purchasing in slices. At every BTC slice of 10,000 that it would go down, I would purchase some more and some more, because that was my plan, and that's how I managed these ups and downs, and I don't really care about adding a bit more whenever it reaches a new level. So we'll see how it goes. Right now, I see a lot of people calling crypto to be a scam, to be a Ponzi scheme and things like that. And usually when you see these types of comments, it's close to capitulation. So I always pay attention to that, because that's the point at which prices start to reverse. But I don't want to jump the gun either in the snowball experiment, but I'm pretty sure that right now is a pretty entry point if you have the tolerance for waiting for a few years, and you can afford to lose the money if ever it is a Ponzi scheme. But that's just my opinion, not financial advice, of course. So that's what I wanted to talk about today. Just trucking on, basically purchasing every week or two. I go back to this account and I purchase some more with the money that is deposited automatically, and I'll keep you updated to the as far as the investments that I will be making in the future. Lastly, where can Bitcoin go? And that's the real question. I try not to forecast too much, but I do trace lines for support and resistances, and then I make a plan and I try to follow that plan as time goes on. And what I've been doing mostly in my other accounts is just buying in steps, and then once there is a reversal and the momentum changes, I'll keep buying in steps upwards as well. But right now I'm buying the knife basically, but systematically. So this is called grid trading. It's not something that I do often, but in crypto I find that it works really well because it's so volatile, and at some point every candlestick looks like a reversal, and it doesn't mean anything really. So I try to make it more systematic, and since I don't use leverage when it comes to crypto, or very little, I don't need to have a stop loss in place. I just give it time basically between cycles. So right now, on the logarithmic chart, you have the blue line over here, which is a support that I've seen a long time ago, and I had traced this as well, probably in previous videos. And as you can see, price just touched the bottom of that zone and then bounced back. Now it looks like it wants to go back and test that area. So that would bring the price down into the 50s. But if we look on a non-logarithmic chart, we can see that green line over here, and this one brings us way, way down in the 30,000s. So that's kind of the not the worst case scenario, because the worst case scenario is always the whole thing going to zero or to very little amounts, because only a fringe part of society want to keep investing into it. But most people bail out basically. But everything is possible. But if it doesn't, this is the worst case scenario where I think it could go, and will still be it would still be Bitcoin. You know, a highly volatile asset that is hard to tame. And right now, I don't think this is a likely scenario, but it's you got to keep an open mind with these things, because they're very volatile, and this is why so many people get wrecked with leverage. And this is why I really like covered calls, because you can purchase at different levels and you still get paid while you wait. So that's a good strategy, I think. But I just had other goals for the snowball experiment. I was trying to show some friends a bit more how I diversify and how I rebalance, and how I sometimes put the pedal to the metal into a sector if I see there is momentum, and then I cash out and redistribute, and that's just how I play that game of finance, basically, when it comes to investing. In trading, it's a whole different topic, and it's not something that I want to touch too much, but I just wanted to show those that are a bit more technical, a bit more savvy in the technical analysis field. So that's going to wrap it up for today. I'll see you in the next video.